Hey, welcome back. Justin Szosa, your friend in the mortgage business. If you've been following along in our home buyer series, you know that we've talked about all things about buying a house, like savings for a down payment, getting pre-approved for a mortgage, and selecting a realtor. In today's video, we're going to talk about how to get approved for the mortgage. And in today's video, we're going to talk about how to get approved for a mortgage and a step-by-step process. Now, because a lot of this relates to first-time home buyers in their buying series, don't think that you need to be scared away, and it's not just for first-time home buyers. This stuff applies to everyone, but it is obviously targeted towards first-time home buyers. So you're going to go through the basics in a step-by-step process. But before we get into it, please do me a favor, hit the subscribe button, hit the notification bell, and hit the like button to help with the YouTube algorithm, so more people like you can see these videos. Hey, and while we're here, feel free to ask any question. Please feel free to ask any of your mortgage-related questions, your real estate-related questions, or your housing-related questions in general. Feel free to put them in the comments section below, and we'll answer them almost immediately. Okay, so obviously you've done all of the hard work. We've saved for a down payment, we've gotten a pre-approval, we've found a realtor, you've gone out and looked at houses, and you've written and negotiated an offer successfully. That's all the hard stuff. And if your pre-approval was done properly, then this next step, which is the actual approval process, should be pretty simple and straightforward. In fact, it should almost be done for you by the time you get to this stage. But we're gonna go through it in detail step by step. What we do when somebody works with us, when they send us a mortgage application, we send them an email that's updating them step by step of the mortgage process so they know exactly where they're at every step of the way. In fact, we call it our milestone emails. And basically what it does is it outlines the steps of getting a mortgage. So all mortgages start in the same place, and that's with an application. And you can either get an application to be pre-approved or you can get an application to be approved if you've already bought a house. Now, the first step, once your offer to purchase has been accepted by the buyer, is to submit your deposit. This deposit is going to go to your realtor to be held in trust until the closing period. This also transfers through to be part of the down payment. When you go to meet with your lawyer on closing, this will be factored in when they go tell you how much money to bring for your down payment, and you will see it in an itemized line by line of how they got to the funds to tell you to bring in. Once you fill out the application, then you're going to go about collecting the documents. Now, if you've already written an offer and you haven't provided a document yet, this is time of the essence scenario, because it's basically 5 to 10 business days for your financing to get in order for your entire mortgage to be approved. So that means you need to get the documents in fast so that your mortgage professional can review them, submit them to the lender, and have the lender sign off on them and make sure that there's no issues. The documents that you're going to need are pretty simple. If you're employed, you need a job letter that states how long you've been at that job, what your title is, and what your salary is, even going through if you're guaranteed or not guaranteed hours. You'll need to provide a recent pay stub dated within the last 30 days, your 2 most recent T4s, and proof of where the down payment's coming from. We will need 90 days bank statements for this. If you're self-employed, you're going to need a bit more documentation. Most of your tax documents, so your T1 generals and notice of assessments, any T4s and T5s that you've issued to yourself, and that the notice of assessment from Revenue Canada. And statement of business activities to prove that you don't have any income tax owing. Every file when you're self-employed is a little bit different and may require some different documents. Once you've gathered all of those documents, send them over to your mortgage professional or bank as quick as possible, along with the purchase and sale agreement and the MLS listing. This is where your mortgage professional is going to do their magic. What we will do is we will book a call with you, which we call our mortgage strategy call, where we will ask you a series of questions, like what are your short-term and long-term financial goals? Or if you're ever going to move. Other things we look at is if you would like to pay down your mortgage faster. These are all important things to consider, because we have lenders during the course of your term. Terms, generally speaking, are 1, 2, 3, 4, 5 years, where we have lenders that are able to offer rate specials. And we want to make sure that we are putting you in the right product so that if ever there's a special that comes across our desk, we're able to save you money in the course of your term. So once you've selected a lender in the consultation with your mortgage broker, and you've selected a product, whether it's a fixed or variable, you'll submit it to the lender and we'll go into underwriting queue at the lender. And then what will eventually happen when the file gets picked up for underwriting, the underwriter will go through it, look at your credit, look at all of the documents and the property. They'll look at your income, they'll see if the deal is something that they want to approve. Now, if your mortgage is insured, which means when you have less than 5% down, then there's another step in the process, which is sending it to the insurer, CMHC, Sagan, or Canadian Guarantee, for the insurer's approval. Now, this is the only time that the insurer will see your deal because it's live. Insurers don't do pre-approvals. So this will be the first time that they've seen your deal. And ultimately, the insurers have the final say. So if they're willing to insure your mortgage, they'll issue an insurance certificate number back to the lender. Then your lender can go through the process of actually approving your mortgage. Now, if you're putting 20% down on the mortgage and it isn't insured, then you don't have to worry about this step in the process at all. The lender gets to make the decision by themselves whether or not they're going to approve you. Now, regardless of whether it's insured or not, once the lender approves you, then what they do is they issue what's called a commitment letter. The commitment letter details the mortgage and what they're offering you. It will have things like amortization, rate, the total mortgage amount, insurance premiums, if they happen to be there, the taxes that you will pay, and whether or not you will pay them through the lender or through the municipality. And all of the details of the mortgage, they also have their standard conditions, as well as conditions you will need to meet in order to get fully approved for the mortgage. And that is where the documents that you provide come into play, because those things will be reviewed, sometimes by the underwriter and sometimes by another department called the document fulfillment person. And if they're accepted by the lender, then the lender will sign off on all conditions of your approval. Now, once they've signed off on the conditions of your approval and you've reviewed your commitment letter, you have a non-binding commitment letter in order to agree that you would take that mortgage. You can still choose and go to a different lender. Most commitment letters are not binding. There's nothing in them that say that you have to take that mortgage once signing. But signing the commitment letter will issue what's called mortgage instructions to your lawyer. And that is what basically is the lender saying to the lawyer, here are the details of what we've agreed upon with the client. Please create the mortgage documents for these details to be signed with the client and is registered against the title of the property. At this point, you've met all conditions with the lender and the lender is happy with all of the documents. Then you will go ahead and remove your financing condition, which will be done by talking to your realtor and it's basically saying, hey, I've got my mortgage done. It's ready to go. What they will do from there is they will send you documentation to sign off on all of your conditions. It's called a notice of fulfillment, which is going ahead and removing your financing condition. At this point, you've bought a house. Congratulations. Now at this point, it's pretty much time to sit back and relax until such time as you go into the lawyer and sign the documents. Now, as your closing date approaches, which is the day that you'll take possession of the property, your lawyer will go to work and they'll get instructions from the lender. They will calculate the purchase price less the amount they're getting for the mortgage, which will be the down payment. They will subtract the deposit that's given, and then the lawyer will add their legal fees and any other costs associated with getting the mortgage registered. And that will give you the amount to bring into the lawyer's office for your final down payment. Now, one point in confusion is often people think that the down payment goes to the mortgage broker. We do not handle any money. We don't want to handle your money. The bank doesn't want to handle your money if processing a real estate transaction. It is the lawyer that handles the money in a real estate transaction. So where you take your down payment is to the lawyer. They will combine that with the deposit given. They will take off any of their fees and take any real estate fees off and send it to the seller. And that will ultimately close your transaction and allow you the title transfer from the previous owner to yourself. So that's essentially it, the mortgage process in a nutshell, start to finish. And again, your pre-approval was done in advance and the documents were asked for. This should be very straightforward. If not, it could end up being the most stressful week of your year. But regardless of which, the good news is everything is done correctly. And at the end of the week, or at the end of the 10 days it takes to typically do this process, you are now a homeowner. Congratulations.